let's admit it, you've been trying to learn supply and demand and you just haven't been able to be profitable. In this video, I'm going to be showing you exactly how to trade supply and demand, how to find the zones, what supply and demand is in my personal setup that's helped me turn $10,000 into over $230,000. And just so you know, that entire account flip happened within 2 months. I know a lot of you guys struggle with things like this, so what I want you to do is watch through the entire video. Don't cheat yourself out of actually learning a skill that can make you money. Just because this video is free doesn't mean that it doesn't contain value. So what I want you to do right now is commit to watching to the very end of this video. It's not going to be that long, and I can guarantee that this video will send your trading into an upward trajectory. If it doesn't, let me know in the comments, and if it does, also let me know in the comments, because I truly think this is one of the best supply and demand videos on YouTube, because I personally think this video is going to help thousands of people become profitable. So stay till the end, make that commitment to yourself, and now let's begin on how to trade supply and demand. So in this course, I'm going to be teaching you guys what supply and demand is, how you should trade it, how to draw the actual zones, and how I personally find entries and my strategy simplified for beginners to understand. So what is supply and demand? When more people want to buy a stock than sell it, that means there is demand. When more people want to sell a stock versus buy it, that means there is a lot more supply. Demand causes the price to move up, where supply causes the price to go down. And over here, you guys can see in this example, we have aggressive selling on the left and aggressive buying on the right. So a quick thing is that not all selling is a supply zone and not all buying is a demand zone. Over here on the left, we have some selling, small candles, very low momentum. It's basically a retail-led move, and big players and institutions have aggressive candles with a lot of momentum. These examples here don't have momentum, and they definitely aren't aggressive. Understanding what a zone isn't is also a big part of knowing what a zone is. So how do you know it's a zone? There's 4 things you want to look for. You want to look for aggressive buying and selling, you want to look for large moves, you want to look for momentum, and you want to look for heavily one-sided moves, meaning that you don't want to see a move go down and then bounce up, consolidate. You want to see it slice right through. With demand, you want to see buying pressure out the wazoo. You don't want to see that many sellers on those candles, because that just means that buyers are more present than sellers, creating demand, causing the price to move higher. So in this example here, you can see we have tons of sellers and not much buying pressure happening. It's an aggressive move, it's a large move, and it has tons of momentum, and it's heavily one-sided. And then immediately here, you guys can see a demand move where it's aggressive, it's a large move, it has a lot of momentum, and it's heavily one-sided to the buy side. So to sum it up, what are these zones? A supply zone is an area where there's a lot of sellers who step in and push the price down. It's almost like a ceiling where the price tends to fall back down. This shows where big sellers have placed their positions on the market. A demand zone is an area where there's tons of buyers stepping in and pushing the price up. This is considered like a floor where price tends to bounce up, and this shows where big buyers are probably waiting to buy more. Diving into supply zones, how do you spot a good supply zone? You look for places on the chart where the price was moving sideways for a bit and then suddenly dropped fast and kept going down. And the drop usually starts with 1 or more big red candles. On the right here, you can see we have a large big red candle. It dropped fast and kept going down, and price was moving sideways for a bit here, meaning we would draw our supply zone at this high. For demand zones, how do you spot a good demand zone? You look for places on the chart where price was moving down or sideways for a bit, then the stock suddenly shot up fast and kept going up, and the rise started with 1 or more big green candles. This tells you lots of buyers jumped in this area and overwhelmed the sellers. So in this example, you guys can see, as you can see, the market was moving sideways and slowly chopping down, and then had an immediate reaction to the upside, and it started with 1 or more big green candles. This is where the buyers overwhelm the sellers. So here are the simple steps to find these zones. Use a bigger picture. A lot of questions I get is, what time frame do I find my zones on? I start off on the 4 hour, then I move on to the 1 hour, then the 5 minute, and that's where I usually look for major zones. And you need to look and find the big moves. Look for places where the price changed direction dramatically. You want to find the launch pad and identify the candles that started the big move. You want to draw a box from the high to low of these launch pad candles and check to see if it's a good zone by asking, did price zoom away from this area? Did price spend a little time here before taking off? And has price respected this area before? So in this example, you could see we had a large move to the upside on the hourly time frame. We drew out our box from this wick to this previous candle's body, and I drew this little rocket here as a launch pad. And then you can see we had moved very high from there. And then when we pulled back, just like previously, we saw an aggressive sell move into that area and then an immediate reverse from that area, causing another move higher. To understand supply and demand further, you need to understand the types of market participants and who we're trying to trade like. There's market makers and liquidity providers, which are large institutions and firms. They help stabilize price movements by always offering to buy and sell. They profit from bid and ask spreads, the difference between the buy and sell prices. And then there's retailers, the brokies, the poor people like me and you. They're small traders using personal funds. They trade on short-term trends or technical analysis, and they often follow institutional traders rather than moving the market themselves, because let's be honest, my 3 lot ES buy is not going to move the market. Even if I was going 30 lots, it wouldn't move the market. But these institutions are trading millions and billions of dollars every single day in the market, causing great price fluctuations. We want to copy the big boys. So why is understanding the market participants so important? It helps you spot who's controlling the market. Is it retailers or institutions? It shows you whether price is being driven by real liquidity or speculation, and it allows you to anticipate potential reversals or breakouts based on the order flow. And using this, we can find our supply and demand zones. So in this example right now, what I want to show you guys is actual zones and my thought process behind finding them. So there's 2 zones in this example that I'm about to show you. What I want you guys to notice is that the market sold off and had a sharp move back up over here. To me, that is a demand zone. So I'm going to take the bottom of the wick to the previous candle that launch padded everything and extend it over. And then what I also want you guys to notice is how we had this large move up and an immediate sell off. That tells me that that's a supply zone. We take our candle from the wick to the body and we draw it out. What I want you guys to notice is that these candles had a lot of momentum on both sides. So to me, these are institutional levels where institutions are buying and selling. So I'm going to extend these further, and now let's see what happens. Into the demand zone we go, and then we see a huge move up, and now that we are in the supply zone and we start to see a rejection, what I would personally do is open up a short position once we've seen that we're starting to reject that area. So then I would set a stop loss at the highs, target a 2-to-1 risk to reward, and then let the trade play out. I would take my short. My stop loss would be at the high. I would target all the way at these lows over here. And then you could see we would have made $2,700, and we didn't even take the long position. So you could have made $5,000 trading 1 lot of ES by using supply and demand zones. My entry model when it comes to supply and demand zones is a lot more advanced. So instead of making this video super duper long, I've decided to go ahead and actually make a free PDF for the people who stayed to the very end of this video. It's gonna go over my order flow strategy, how I trade these footprint charts, and how you can learn them without having to pay for any expensive course. And if you guys want my alerts and trade alongside me for completely free, you could go ahead and join the second link in my description, which is my free Telegram, where I post all my alerts, all my analysis every day before the market open, and where I have been posting for the last 6 months, every single trade I've taken. So if that interests you, make sure you guys do that. And if you enjoyed this video, make sure you drop a comment, make sure you like the video, subscribe. We're trying to hit 20,000 subscribers and make this the best community on YouTube when it comes to the trading community. I appreciate you for staying till the end. And if you enjoyed, I'll see you in the next one. And just remember, I'm watching from afar, so keep putting in the work and keep getting better.